Okay, so this is going to be a little bit of a weird video for me, but please stay with me. So what we're going to be doing today is we are going to be looking at the opposite side of what I believe in how to invest. For those who don't know and haven't watched my channel before, the way I like to invest is that you, over a long period of time, you average your price in. So what you do is you don't worry about the price of the stock, you just buy it and buy it and buy it over a long time. And what that does is it actually enables you to have a better amount of return over time. I believe that dollar cost average will always be the best way to invest, is because I believe that if you just look at the market low, you will never actually be out. If you just try and wait for the market low, you will never actually get the best possible returns. So what happens is you wait and wait and wait, and it just never happens. And sometimes you miss out, and sometimes it just doesn't work. Which is why I think that it's really best to just dollar cost average over time and try and invest your money evenly. So why am I bringing this up? Recently around the world, and especially in America, what's happened is there has been a recent influx of day traders around the world. So what happens is that these people, often called day traders, they don't invest for the long term and they more or less gamble with their money. What happens is that they go around and they invest in stocks for a few days, for a week. And what they do is they try to double or more the money. There is now suddenly a massive influx of people trying to day trade as an after effect of the virus. People are now day trading because they believe that the worst is over and that the stock market is low, so they have to get in. This is basically FOMO, or fear of missing out. Right now, the stock market is in quite a good position in comparison to where it was 3 months ago. 3 months ago, we were in a bear market where the stock prices were at an all-time low in comparison to where they had been. With the stocks flipping from being in a bear market to a bull market, we are now expecting stocks to increase in price, due to the fact that people are now becoming more secure with the money and they're starting to believe in the market again, believing that it will increase over time. Most of the time when it comes to the stock market, a lot of it isn't actually to do with what the actual stock is doing. A lot of the time it actually comes to the psychology of the mass. So what happens is that when you look at certain types of trading and whatnot, you actually don't go off what's happening mathematically, you go off what's happening with psychology. You go off the fact that if a company wants to become bankrupt, a lot of people are not going to want to buy that stock, for example. However, please be mindful that a second wave of illness is more than likely to come, and this could cause another decrease in the stock price around the world. However, recently some companies have decided to become bankrupt. What this has done is this has increased their price drastically due to day traders. While their stock has been increased, this has allowed them to have an overpriced stock. With the overpriced stock, they have sold this to the masses, and what this has done is this has allowed them to create equity in their company, while also this has allowed them to pay off any liability and any debt, allowing them to get out of trouble that they are so in. For example, recently in America, the company Hertz has filed for bankruptcy. At the time of bankruptcy, their stock price was at 40 cents. After bankruptcy, their stock price was at $6.50. That's massive. That's more than 1,000% increase in their stock price. What they have done is they have filed for a special type of bankruptcy, which allows them to stop their services or whatever they do, however they get their money. And what they do is they focus on the internal structure of their business. During this time, their stock can still trade. However, the majority of companies tend to take their company off the public exchange. This is due to the fact that the majority of the time, when a company becomes insolvent or bankrupt, that the stock price of it plummets. However, due to the common influx of people now having the ideology that nothing bad happen because the worst has already gone past and everything already happened. What's happened is because they have that ideology, they believe that nothing's bad is going to happen, so they dump all their money into it. When day traders are dumping money in, it's going to rise the stock price. Of course, that's how stock price works. More people buy in, more people are going to want it, and there's a higher stock price, higher demand. Hertz, however, is not the only company which has done this. Woody Petroleum has also been in the same boat as they have in the last few weeks. They've also filed for the same type of bankruptcy, and their stock price has also seen a drastic increase. What's happened is that their stock price has increased drastically over time of a week, and then over the next week their stock price has gone back down again as people have started to sell off their shares because they realise that the market has already been inflated due to their drastic increase in demand on that stock price. In the last 2 weeks, over a dozen bankrupt firms have increased by 50%. In the last few months, analysts show that penny stocks have outperformed the market drastically in comparison to the rest of everything else. So if you don't know, penny stocks are stocks which are generally quite low price. There has been an average gain of almost 80% of stocks that are below $1 in the last month. This is realistic evidence that day traders have an actual imprint into the market and can control the price of a company. According to Robinhood, in the past month, companies such as Hertz and Luckin have been in the top 10 companies in order to trade with. While also analysts predict that the S&P 500 has now increased by 45% over the last few months from its bottom in March. What this means is that people are now starting to believe that the worst is over. Analysts are now seeing signs that the market has now become overbought, and now they believe the market will either become stale and stagnant and just stay at this point it will be for a while until it's no longer overbought, or it will decrease to the point where it's no longer overbought as well. Before we end this video, I just want to make it absolutely clear that day trading is not investing. In fact, it is gambling. There's no way of actually predicting the market and how the market actually reacts to certain situations and whatnot. For instance, the companies which have become bankrupt could easily become insolvent and could no longer pay their stockholders, which means that if you invested money in a day trader and have put that in, you would no longer be making any money and your money would be gone. There'd be no way of getting that back. Traders now seem to be banking on the fact that the Fed will take anyone out of bankruptcy and help them, because due to the fact that the central bank is now investing in high yield saving bonds. It is important to recognize the difference between day trading and investing, as I believe the best way to make money is still, as I have said earlier, which is investing for the long haul and cost averaging your prices over a long period of time. I think that in the long run, this would be amazing and it will help anyone to make as much money as they can possibly. I think if genuinely everyone does this in the world, people would be able to have a much better quality of life. I think that genuinely a lot of people don't actually understand the risk taken when involved in a trade such as this, where they're going to buy a company which is bankrupt. And I believe that if you are wanting to actually go and start day trading after watching some of these videos and whatnot on day trading, I want you to make it clear that only use money that you don't need, that you can do with that. What I'm saying is that use the money that you're going to use next week when you go out to the pub or like when you go to a nightclub that you've been saving up over the last 2 months. Use that money. Don't use your rent money, because it's just, there's no way, you wouldn't gamble that, would you? You wouldn't go to the pokies and put all that money in and whatnot. It's just not right to do that, and I think it's probably best if you just use money that you don't need. I think that you should be careful whenever you are day trading and should expect to lose money. If you go in expecting to win money and make a lot of money and make thousands out of this, I don't think you're actually going to get anything out of it, because I believe that if you go in expecting to win a crap ton of money and whatnot, you aren't going to do anything. I mean, I especially think that if you go in expecting to win a heap of money, as soon as you hit one little bump, as soon as you hit one little thing that's going to, derail the whole thing, it'll kill your enthusiasm for the whole thing, and it'll just be really hard to get back on track and then start keeping day trading again. I think you need to expect to lose the money that you're putting in, and you need to be okay with the fact that you're going to be able to lose that money. I think that's everything for me today. I hope you guys are all having a great day and you guys are all safe, happy, healthy, and have a great day.